viewers, subscribers, traders, and investors. It's time for another Monday morning market roundtable, and I'm joined today by Roger Scott, Jeff Yasteen, Adam Sarhan, and Jeff Zananiri. Welcome, gentlemen.
Hello.
Thanks for having us on.
You bet. Okay, so let's start with how about the markets? The markets are kind of lightening up in terms of liquidity lately, and is that a reflection of what's going on with the election just 2 weeks away now, Roger?
Well, I think the markets are. I think we're seeing liquidity, but we're not seeing a lot of trading range, and I think that's going to be the story for the next few weeks. I just think there's too much uncertainty. I think markets are in a wait and see pattern right now, and I don't see a lot of surprises on the table. If the president, if the Dems and the Republicans agree on the aid, we may see a little rally come off of there. I can see that happening as Trump's attempt to get more votes before the election. But in terms of the news, in terms of the economy, I think honestly the COVID right now climate is really driving everything, and I think we're just in a little pocket of uncertainty between now and the elections.
Mm-hmm. Okay, Jeff, what do you think?
It's starting to feel like midsummer, or like to a lesser degree midsummer, where things slow down, and you can see there just isn't that much follow through on a lot of things, as they just kind of trade in narrow ranges, or break down inexplicably, and it's just various folks on Wall Street and hedge fund types moving, I think, to the sidelines, and just it's going to be like that until we get some sort of resolution on the election. Yeah, for sure. Sure.
Okay. And Adam, can you add to that?
Sure. So for me, I'm looking at two things. We've got earnings, and then we also have some economic data coming out over the next few days and weeks. And of course, the big thing is the election. So what I want to see for the two things that I'm looking at is how the market, well, first off, what the numbers actually are. Are the earnings and economic data good? Or are they bad? And then more importantly, the second part of it is how the market and individual stocks react to those numbers. We have Netflix tomorrow, Lockheed Martin reports tomorrow, and then, hundreds of stocks over the next several weeks, not just days. So I really want to see how the stocks performed last quarter, and then I want to see guidance going forward. Are these CEOs optimistic about the next quarter, or about the current quarter and the end of the year and future quarters? Or are we going to see a shift in sentiment, which is Roger's point earlier about paying attention to sentiment, which is extremely important. And if we start seeing companies lower guidance or slash guidance, that's not going to be a good sign for either Main Street or Wall Street, because what's going to happen is you're going to see a shift in the narrative. Everyone's expecting COVID to pass. Everyone's expecting the economy to recover. But if these CEOs start doing different things and saying that they're pessimistic and not optimistic, that could, seriously change the conversation. So all that's important. And of course, the stimulus, we want to see if a deal gets done, and how big the deal actually is. It might be like the China plan last year, where everyone was expecting a China deal, and then they said, okay, we'll break it up into three parts. Phase one got done, and now we're waiting for phase 2 and 3. So maybe the stimulus ends up being something like that, where they hedged a little bit, they get a smaller deal done before the election, and then whoever comes in afterwards, another deal gets done later, which could be larger. So all those are things that I'm watching over the next few days and weeks.
Okay, and Jeff Z, what have you got for us today?
The last part that Adam just said was probably the most important factor I think that's hanging over this market, other than obviously, on a case-by-case stock earnings report. But I think that they need to get some sort of, I think the market last week was really dampened by the prospects of zero stimulus happening before the election, because as you know, PPP money's run out. A lot of people are really in bad shape and really hurting and need that lifeline. And so you saw companies, you saw sectors that were vulnerable to the fact that, broadly speaking, those people are out of business, do really bad. You saw those stocks do really bad. You saw REITs do really bad. You saw a lot of things that have been running good that depend on this stimulus do bad. So I think that they're gonna probably phase it out. They're playing the political game. It's always a high-low negotiation, but at the end of the day, both sides have too much to lose from the blame game, and neither one can scapegoat it either. So I think they'll get some mini deal done this week, and then it'll kick the can down the road, because that's just what politicians do.
Sure. Sure. Okay. So the coronavirus infection rate has just blown through 40 million active cases in the world today, and so is it? Do you think that President Trump's sort of downplaying of the danger associated with the virus is going to hurt his prospects in the upcoming election, Roger?
Yes, I do. As a matter of fact, that's one of the things that people are criticizing him. If you look at the poll numbers, if you look at his weakness, one of the biggest faults that people are finding, even people that he's popular with, is the fact that he underplayed or made COVID more dangerous or underestimated its danger compared to what could have been. That's, I think, one of his biggest downfalls. I think, honestly, he would be leading in the polls right now. And again, the polls don't tell us everything, as we've learned from last time. But I think that's one of his biggest. I think if there's one thing he can go back on, would be how he dealt with the COVID-19, his response to the COVID-19, and his reaction to the COVID-19. Because you see, one of the things is this: he could say what he wants, but you have a person. Yesterday, for example, I'm reading online, some 30-year-old Russian influencer dies of COVID. It's like a healthy guy, I mean, bodybuilder, and 30 years old, dies of COVID. And here's Trump saying, it's okay, it's not that dangerous, it's all good. Don't listen. I mean, this morning he's saying, he's quoted as saying, if I don't win the election, you're going to be hearing from, you're going to be listening to scientists. Don't listen to scientists. Scientists don't, I mean, things like that, blanket statements like that are not helping him, because whether politics or not, people are not going to give up on science. So I think that he needs. I think he would have been better off if he would have embraced COVID in a slightly different perspective, if you will. But I also I just wanted to come back and say something real quick. I do agree. I think earnings right now are also a factor in play, and I just wanted to give you guys some numbers, some actual numbers, so we can actually discuss actual figures. Third quarter as a whole, they're now expecting the numbers to be down 18.9% on 2.4% lower revenue. So if we start seeing the numbers as we get deeper into earnings better than down 18.9% for third quarter, that's going to give us a little better, a little more bullishness. Also, with the revisions that we've seen, and the revisions have been just unbelievably bearish, 85% so far. We've seen only 50 companies report. 85% have beaten earnings per share. 77 have beaten estimates. And this week we have a total of 86 members coming out, and 49 are out already. So by the end of this week, we're going to have a really good idea of where we stand. We're going to have about a quarter of the S&P out by that time. It'll give us a better idea. But right now we're standing at 18.9%. That's what the market is assimilating into its value.
Okay. So Jeff, then on that note, are there any particular standouts among the companies reporting earnings that to you represent perhaps an opportunity?
Yeah, I mean, I guess I sound like a broken record on this, but I still like the idea of financials. I think oil is looking interesting here. And I think there's a case to be made for buying more renewables. And this is partly if you think that Biden's going to win, but also partly because I think it's just something that is going to be, we're going to see more and more of that happening. It's just part of a broader trend that utilities and even some fossil fuel type energy companies are embracing more of in their asset base. So I think you could look at all those. And I think, going to Roger's point and everybody else, I think the other thing is just keep some money on the side, because I feel like whatever sort of weakness we see between now and election day, or perhaps even after election day, it's sort of like the pause that refreshes. I like that the Dow Transportation Index is making new highs. The Russell 2000, arguably the riskiest part of the major indexes, not yet at new highs, but seems still to be continuing with some nice strength there. And I think it's just a matter of getting enough people sort of throwing tell in on a short-term basis to sort of give an excuse for Wall Street to come back in and for the rest of us to come back in and buy for another leg up.
Sure. And Adam, do you have any particular companies you're watching that you're expecting a surprise on earnings to the upside?
Sure, I'm really interested to see what the tech stocks do in this quarter because they've had a huge move and we've seen them rally largely predicated on the fact on that forward demand where they're getting a lot of business because of the whole stay-at-home situation. If they can continue to put up big numbers, Netflix reports tomorrow, that's the first one on my radar. That's going to bode well going forward because that's going to show you that, hey, it didn't just dry up, meaning everybody who signed up to Netflix or everyone who signed up to Peloton or Zoom or whatever it is already signed up. It shows you there's still a lot more business to be done over the next several quarters. So that's going to be very important. The other important area that I'm watching are the financials. And I think Jeff Y and Jeff Z and also Roger have discussed this at length over the last few weeks. If the financials can catch a nice bid here, meaning they rally and they go up, that's going to bode very well for both Main Street and Wall Street because the financials make money when the economy is moving because money has to flow through the economy. They flow through the big financial institutions. So when you see the financial stocks rally and they rally hard on volume, which very well could happen at any point here going forward, that's going to bode well for the entire market and for the economy. That's going to tell you that what we're seeing in the transportation stocks and in the retail stocks is actually translating into other and spilling into other areas of the economy because the retail stocks have been very strong. Roger's point about the materials have been very strong. And transportation stocks have been very strong, all based on the fact that we're expecting a rebound in the economy. So if the financial can catch up a little bit here, that would be really, really encouraging going forward.
Okay. And Jeff Z, what are you liking in the earnings reporting?
Well, yeah, I mean, this market is living and dying on tech. I mean, a lot of banks already reported last week. So there's, we know what's out there with that. And a lot of them kicked ass and the stocks are not. And that's kind of discouraging because I've been bullish on it, but you have to be realistic about what's happening and what's not. Like Adam, I'm very curious to see what Netflix does. And I'm looking to see what the semiconductor, that's Texans on my mind too. I'm looking to see what the semiconductor as a whole, the space does, because it's had this huge ramp up. Like what a lot of people don't realize is that semiconductors are cyclical, but what's happened now is outside of the cycle. And the amount of dependency on computers, the amount of people that have gone out and bought new hardware in the past quarter is almost unprecedented. And if that's something that, we are underestimating, I think you could get a huge boom in those stocks. Now, the Nasdaq's up 30% this year. Like it's an outlier. I look at the whole world. I'm looking at indices all over the world. The Nasdaq up 30% is the outlier. Most indices are slightly up, close to flat. A few of them are down. Europe's down a lot. But this move in the Nasdaq is extraordinary. But it's not based on pure fantasy. It's based on companies making unbelievable amounts of money.
Yeah, you bet. Okay, so China just reported 4.9% growth, GDP growth so far this year. And I'm curious as to, is that to be construed as a bellwether for the global economy, Roger?
I think it is. I think this is very, very positive. I was actually commenting on the exact same thing today. China is growing. They've had multiple reports that are showing good signs of exports and growth in the economy. They've been consistent. Moreover, because China can fib sometimes. I'm seeing the things coming out of China and I'm seeing the supply chain and it's stable right now. I don't remember if you guys recall or not, but I was giving you some examples of things that I was trying to buy or things that were unavailable when China was just started going. And now it seems like things are out. Like when I go to Best Buy and I try to buy camera equipment, most things are in stock. When I'm going on Amazon right now, I'm not seeing the type of price gouging that I was seeing 3 months ago. So that's telling me, because believe it or not, a lot more things are made in China, or parts of things that are even made in the US are made in China that a lot of people realize. So when you're seeing the supply chain come through, it's really showing us, not just telling us, but showing us that China is back on track. So yes, I think it's a very, very strong sign, but I also believe that the political pressure is going to be a major factor in terms of this trade war with China. I think that's going to be huge. And with that, I want to go back to something that Jeff Yasteen said when he talked about the Russell 2000. the Russell 2000 really, really, really favors Biden in comparison to Trump. Why? Because the Russell 2000 started behaving very, very negatively as soon as the trade war was announced. There's reasons for that. You got smaller stocks, they're a lot more vulnerable. There's a lot more Chinese cross-currency stocks, a lot more one-trick ponies, and a lot more tech stocks that are smaller, meaning more vulnerable. So the Russell has essentially been in a sideways market till about a month ago, and at that point, it started outperforming the S&P, and that's implying right now that, and the solars, by the way, again, Jeff Yasteen mentioned the solar stock. They are roaring right now. Those two things, the Russell and the solar stocks, are implying that Biden is, or at least in the investment world, is reacting like Biden could possibly be leading ahead. Also, I'm going to tell you another thing, aside from putting aside this Biden, this has a lot to do with China, because Russell right now is all about China. If you look statistically, and I've ran back tests as early as this weekend, okay? Whenever the Russell 2000 lags behind the broad markets for X amount of time, over the next 3 years, the Russell tends to outperform the S&P 500, and we're entering that stage right now. So if things will line up the way the market is telling us, or at least showing us right now, the Russells have a good, healthy run up, and they've been suppressed by about 15% since last February. So you're talking about a giant being awoken right now, and that has just about 15% to trade higher, just to be parallel to the S&P. If you look at their correlation over a 20-year period, it's about 97%. So what I'm really saying is the Russell has a lot of catching up to do. And stocks in the Russell that are making new highs right now are very important, because you have the individual stocks and you have the index itself that's screaming higher. If you look at the three indexes, the Russell has the highest spread between the 50-day moving average, and it's looking the strongest right now. And both indexes, the S&P and the Nasdaq, have not been able to overcome their all-time high that happened on September 2nd, but the Russell whisked way past that. So China's looking healthy. The Russell's confirming that right now, and you have a double whammy for the Chinese economy if Biden does win the election. So there's a couple of factors showing us strength in China right now, including the recovery phase and the fact that Biden may win the election, and the Russell 2000.
Okay. Jeff, what does the Chinese data mean to you?
A couple things. One is, because of the trade war the last, 4 years or so here, I think it's been severely, depressed on a valuation level basis. There's been some very high profile blowouts, like Luckin Coffee. That was a major fraud, essentially. And so a lot of that really turned many, many people off to Chinese stocks for good reason in certain cases. But at the same time, when you look at like an Alibaba versus an Amazon, Alibaba trades at a discount to what Amazon does, and you can say, well, maybe that's something that should be a discount should be applied there. But I just think in terms of valuation levels, I think there's opportunity there, and I think also there's an opportunity in emerging markets. Again, if you're selective, if only again because that's an area that most investors have avoided basically for most of the past decade, and because of that, a lot of those stocks are also equally beaten down and at levels that depending on what happens with Biden and Trump and what goes forward there. Again, there may be an opportunity to buy many of those because those may also fall into favor or come into favor, especially as we go into 2021.
Sure. Adam, has the Chinese data done anything for your portfolio?
Yeah, sure. So I think Roger's point and Jeff's point too about the Russell 2000 being a really important indicator it matters. The Russell 2000 after the 08 meltdown, that Great Recession, recovered on a percent basis a lot more and a lot faster than all of the other indices. And then it stagnated or just stopped going up, and the other ones caught up. They played catch up. And now what's happening, just fast forward to today, like Roger's point, it's actually the one that's underperforming, and now it's playing catch up. And making sure that that continues would be a very good sign. China's, I mean, for all intents and purposes, you love them or hate them, they're the largest manufacturing segment of the entire global economy. So as the global economy grows, China's economy is the beneficiary because most of the stuff is made in China. And you see that when you look at China's GDP and China's manufacturing data, so on and so forth. So when their economy contracts, that's not a good sign for the global economy, because that tells you less companies are making fewer things in China, and that translates to slower economic growth. So it's not just important to look at the China data. The China data by itself, unless if you're heavily invested in China, isn't that much. But it's what I look at it as a proxy for the global economy. And as long as that Chinese data continues to be in the upward trend, then that bodes well for the US economy, the European economy, the rest of the global economy as well, because most of the things are made in China. And that's just the reality of the world that we live in today. Hopefully that changes, so we don't have that dependency there. And I think it will at some point. It reminds me very much of oil. Remember 10 years ago, 20 years ago, we're heavy, dependence on the Middle East for oil. Now, all of a sudden, US, we're an energy exporter. And we've broken that dependency, that addiction to foreign oil. I feel like the manufacturing at some point will change. If it's not, doesn't come home, it could go somewhere else. But I don't think that this whole dynamic is going to stay as is over the next 20, 30 years. Maybe it does, I don't know, but I would like to see it change just from a diversification standpoint for the global economy.
Okay. And Jeff Z, has the China financial performance affected you at all?
Yeah, there are a few things in this world that I put less stock on than the CCP official numbers of what their economic figures are. Yeah, I don't know anyone that trades off of Chinese GDP or ever has, because it's a ludicrous number. It's totally fabricated. But if you look at commodity demand, iron ore, steel, the basic raw materials that are required in the type of growth that China is a big part of, you get a better picture of what China's doing. And most people have them kind of flattish to slightly up, certainly not the 4.9% that they posted. But my main point is this. What I really want to get at is this. China is in deep doo-doo. The old model of selling cheap crap to the world and having doors wide open has been flipped. And that, like fossil fuels, their model and their system is antiquated and running on a finite amount of time. That's my main central thesis. Internally, they still have amazing growth potential. And you see that the best Chinese stocks are the ones that focus the most on what they do inside China, right? So the Alibabas of the world that get 80% of their revenue from China, those stocks are crushing it. But the Chinese companies that are dependent on this laissez-faire global trade, globalist system, they're going to have to rethink their approach as to what's happening. And a factor that I don't think is really being appropriately priced in is I'm looking to see if the Biden-Schuin election victory gets too priced in. Because last time in the last election, Hillary Clinton was an 85% betting favorite on the day of the election. Right now, Joe Biden's around 65 to 69%, fluctuating in that area. And the numbers are almost identical in terms of the polling. If you go into the swing states in particular, I don't know. Is it a shoo-in? I don't know. But it might be priced in like it's a shoo-in. And then what happens if he loses? What happens, besides most people being in denial and drinking a big ass pot of coffee and crying that morning? What's going to happen to your investments? What do you think your China stocks are going to do if Trump wins? That's a risk people need to think about. They need to think about it because we don't know what's going to happen. We never do. So you have to have an appropriate commensurate amount of reward based on that risk.
Great point. Great points all today. Thank you very much for joining us today, gentlemen. We'll leave it there and we'll come back to you next week. Have a fantastic week.